When gold gets down to around 1,500 an ounce on the futures, maybe 1,450, I think that is going to be like a 1999 gold buying moment, and that's what I'm waiting for. And when it does get down to that level, that low, I'm gonna really go heavy into gold again.
Just to start off, I want to talk briefly about 2021 and get your thoughts on gold in 2021 if it performed as you expected last year.
Um, so gold in 2021, at times it performed as expected, and then we had some really big sell-offs around the quarterly options expiration. So if you go back to quadruple witching in June of 2021, major sell-off. Again, I believe in September, a major sell-off. So right now, gold was talking to us back then, and it was telling us that the equity markets are going to come. It's always forward-looking. Gold's a great forecaster, and it was just telling us the equity markets were going to come under problems in 2022, and they started, late in the year. Very, very poor Santa Claus rally, and obviously no January effect whatsoever. So the markets came under pressure. But gold was telling us that. Right now, I think gold is a little bit short-term bullish just because there's a fear trade out there. But overall, I think gold is going to make another pretty substantial decline. And so right now, I have upside targets on gold futures to around 1870. I think that's kind of where it goes. Silver could possibly reach 26. I don't think it goes any further than that. And then I do think we're going to start another down leg for gold. But here's the good news for everybody out there that is a gold bug. When gold gets down to around 1,500 an ounce on the futures, maybe 1,450, I think that is going to be like a 1999 gold buying moment. And that's what I'm waiting for. And when it does get down to that level, that low, I'm going to really go heavy into gold again. Now, full disclosure, I own every single ounce of gold and silver that I've ever bought. I've never sold a single ounce, and I've been a buyer since 2003. So I believe you're going to get that kind of opportunity. And I do think gold will have its day in the sun finally. But the chart pattern right now suggests, yeah, you'll get a pop maybe to around 1870, 1872, maybe 1875 on the futures. I don't see it going higher than that. And then I do think we're going to probably see gold fall one more time. But like I said, it should lead to a major, major opportunity on the long side if you get gold around that 1,500, excuse me, 1,450 level. I think it should just be an excellent opportunity.
Okay, and that 1450 to 1870 range, is that all happening in 2022? What are your thoughts there?
I think a lot of it will happen in 2022. I really do. So, within the next 12 to 18 months, I think this all takes place. And when gold gets down to that level, it's hard always to work out the timing so specifically. Sometimes you got great timing models. Other times gold is tricky and it doesn't play along as expected. But for the most part, the levels should be good. The ranges should be good. So more so than time, I'm actually going to just go off of that price level, as I think that's what will work and make investors money.
Okay, perfect. And I think that those who follow you will know you take a very charts-based approach to what you're looking at when you look at the market. So I wondered if you could talk a little bit more about the signals that you're seeing that tell us that gold will be trading in this range most likely in 2022. So I always find it so interesting that, different people can look at the charts and see different things. So maybe you could tell us what you're seeing there.
Yeah, so I use charts. Basically, I'll look at all different time frames. So one of the most important time frames that I like to watch is a monthly chart. A lot of people will discard that and they'll stay a little bit narrow-minded and they'll stick with the daily chart, and that's all they'll key off of. But I like to look at the dailies, the weeklies, the monthlies. I like to calculate time. I like to calculate price. Those are kind of my methods that I've adopted over the years. And, it's not perfect, but it's pretty good. And right now, when I look at that monthly chart, I just don't see a good picture there for a long-term bull run. I see another dip first, and then I think after that dip, everybody will get bearish in gold, and that's when gold presents a great buying opportunity. I always like to make things real simple, but when everybody loves something and they're all on one side of the boat, I'm the guy that's going to the other side of the boat. and I'm going to get the life jacket just in case that boat turns over. And right now, you get that sense or that feeling that everybody loves gold at this point in time. So I would be a little bit careful. I do think it has upside potential on the daily chart, and that means for days, maybe a few weeks. But overall, on the monthly chart, it's a bearish picture at the moment, and we should experience one more severe down leg. And once that happens, we'll fulfill that downside pattern at around 1500, maybe 1450, and that's where you'll get your golden goose buying opportunity.
Right. And as we look forward, beyond this year, do you have a gold price target that you're looking at for the much further out future?
A lot higher than the recent all-time highs. I think when you get the next breakout, just the map of symmetry probably puts you at 2,500 to maybe 3,000. And once something takes off and it breaks out of a prior peak, depending on how you get through that prior peak, the run could be substantial. I know in the past we've heard people talk about 5,000-6,000 gold. I don't think that's crazy. I think that is certainly in the cards and a possibility, but I could never go out on a limb and say that's where it's going to go for certain until you get through one high, and then you have to calculate it, and then you get to another mathematical resistance point. Then you calculate that. If you get through there, you can continue to climb. I call it break points, and you have to get through these break points. So it's never so simple to say gold is going to 8,000, or gold. That stuff sells newspapers. It gets people excited. But, I'll see how it looks when we break the old high from, August of 2021. And then I could say, all right, now we're headed to 25. Now we're headed to 3,000, or, we could come up with a new level. But that's how I like to do it. I never really like to just go out and say, hey, 5,000 is in the cards. While I certainly think it's a possibility, and a fair possibility at that, it's tough to put that out there at the moment.
Yeah, no, I like that approach. Very measured, very, very patient. I want to also ask your thoughts on silver in 2022. It's pretty closely tied to gold. If you're watching gold, you're probably keeping an eye on silver as well. So what are you seeing for the white metal this year?
Yeah, so right now, I think silver has a shot to actually go up to 26 in the short term. Now, when it gets to 26, I think that's where it hits its real big resistance point, where it's probably needs to start to stage its decline. So my major pullback level for silver is going to be around 18. When silver gets to 18, I would back up the truck and load it up with silver, and that's when silver will have its golden moment. As you know, the two kind of trade together. They don't always trade perfectly together. Sometimes they'll diverge. But overall, I do think that silver near term heads to 26. When you get to 26, if you own it there, if you own the bullion itself, I wouldn't ever get rid of it. But if you own the paper products like the SLV or something along, these ETFs, then I would probably take profits at 26 in the near term. And then I would be a big buyer, and I will be a big buyer myself at when it gets to 18.
Okay, perfect. I also want to ask, as we're getting a little bit closer to the end here, we're heading into a pretty interesting time in 2022, or at least that's what it looks like. So looking beyond the precious metals, where are you seeing opportunities for the year? It could be in commodities, but it doesn't have to be, just where you're looking.
Yeah, I mean, right now, I'm very bullish the dollar in the near term. I think there's an opportunity there. I think the euro's headed down to around 108, 109. So you could short euro right now. I like yields. I like bond yields to go up. I think that's the best trade right now. Yields are going to go higher. So you can own something like the TBT, or you could short the IEF, or short bonds, go anything long yield. I think that's a very, very good play. They're not going to go to 4 or 5% interest rates on the 10-year or the 30-year, but I think yields on the 10-year could go to 2.25, 2.5%. On the 30-year, I think we'll go to 2.5 to 3%. So I like the long bond. I like yields on the long bond. I think there's money to be made there, and it's not the most difficult trade. As for stocks, it's going to be tough. You're going to have to really, really pick them selectively. if you're going to be in any stocks right now, what I've been doing really since um, November of last year, I've been in a lot of these consumer goods names. So I think that's the place to be, where they pay a dividend, they got pricing power, they could hike the cost of goods in an inflationary environment, because we're in an inflationary environment right now. Now it won't last forever, but it's here for the time being. And you have to get into stocks that right now that are solid companies. They have some pricing power. Technology, while there'll be bounces there, is going to be a very, very tough trade. So you want to be careful there. But overall, there'll be some shorting opportunities in there. So it's a trader's market. I love this kind of market. This is my favorite. So last year was I don't like those kind of markets where, the central banks came in and just propped up the liquidity, and that was kind of a one-way trade. This time around, we got a market again, and that's good to see, because the market's, after a big distortion and, everybody leaning on the central banks, now we're starting to see that, the central banks, when they can't get in there, you see what happens to this stock market, and it's good to see a tradable market again.